Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a fresh day and we're already midway into the week. Looks like a positive start today for the markets, as pointed out by the GIFT Nifty. We had a day of consolidation yesterday, but whether or not we will see a smart rally like we did on Monday is something that we'll watch out for. But one good news coming in from the macro front, that is the retail inflation figures for the month of April, best in 6 years, and it is quite repetitive. So that is something that investors could cheer on as well. On the other hand, if we look at the global setup, we are largely on a positive foot. Tariff uncertainty is out of the way. US markets were mixed overnight. S&P 500 definitely in the black, and Asian markets have also started the day largely on a good note. So globally, we have a good support which is coming in. But since we are at the end of the earnings season, so bulls are waiting for more triggers to keep their sprint on for the upcoming sessions as well. Now going forward, we'll also be taking stock related queries as well, so keep posting them on our live feed and we'll take them up shortly. But before we delve deeper into the show, let's take a look at the top headlines this hour. The S&P 500 rises higher, clawing back into the positive territory for the year, and the Nasdaq also surges 300 points on optimism around US-China trade deal and softer than expected consumer inflation print. Stocks in the Asia Pacific have opened largely higher after erasing tensions between US and China. The GIFT Nifty is indicating a gap up start for our own markets. Crude prices edge higher as trade tensions ease between US and China and better than expected US CPI print. Gold prices also rise on bargain hunting after a sharp loss on the previous day. India's CPI comes at a 6-year low of 3.16%, dragged down by food inflation. The lower than expected inflation print in recent months, including April, have led to economists lowering their forecast for full year below 4% threshold. And Tata Motors results were largely higher than expected, but management has given a cautious outlook. Bharti Airtel also reported a good performance, with revenues rising 6% on a sequential basis. So if we take a look of how the markets reacted yesterday, we did see a breather after the smart rally that we saw on Monday. Nifty fell about over 400 points below that 24,600 mark. And on the other hand, if you look at the mid-caps and small-cap indices, that exhibited resilience. Small caps advanced for the second straight session as well. On the other hand, if you look at the media on the sectoral front, media, PSU Banks, Pharma indices, they were the top performers of the day. And on the contrary, the picture looked reverse. That was your IT, FMCG and auto sectors, which saw significant losses in yesterday's trading session. Defense sectors, defense stocks, they continue to see buying interest given that the geopolitical tensions and the cross-border tensions have seen a bit of ease. The ceasefire continues for the fourth straight day, but whether or not we are completely out of the woods is something that is keeping the buyers interested in the defense theme. On the other hand, on the macro front, like I was talking about, good numbers coming in for the month of April. India's April inflation in data has hit lowest in 6 years. So that's a good cue coming in from the macro picture as well. Some of the Q4 results that we'll be watching out today, that is your Hindustan Aeronautics, Eicher Motors, Apollo Tyres, that we'll be watching out in today's trading session. And some of the stocks which will be reacting to its Q4 reports, that is your Tata Motors reacting to its Q4 numbers, and Bharti Airtel too are reacting to its March quarter performance. MSCI rejig, an important update coming this morning is the MSCI rejig is expected to take place on the May 30th, and Nika and Coromandel International is expected to be a part of the India index. So these two stocks we need to watch out today, as certain inflows are expected to be for both of these counters. Now, three main cues that we'll be watching out for today's trade setup. First is your FI data. Yesterday they were the net sellers. They have sold stocks which was worth about 477 crore rupees in the cash markets. On the other hand, DIIs, they've stood at buyers. They have largely bought on the higher end. They've bought stocks which was worth about 4274 crore rupees in the cash markets. Coming to the option cues data, Nifty put call ratio fallen to about 0.85 from 1.29 levels in the previous session. And the third is your F&O ban list on your screen. where the stock that has been retained continues to be a part of the F&O band that includes the likes of CDSL and Manappuram Finance. And none of the stocks have been removed out of the list just as of yet. But coming to the pre-open rates, let's take a look at how both the rates stack up at this point of time. Sensex up about 165 points in the pre-open, and Nifty is also up about flat in the green at this point of time in the pre-open. But with this quiet start, let's watch out if the bulls can keep running throughout the session also. But on that note, let's quickly get on board with a technical expert of the show. Joining me, Vaishali Parekh of Prabhudas, Lilladher. Vaishali, good morning. How are markets looking at present? We are out of the tariff volatility and the ceasefire is maintained too. What are you watching out for next?
Very good morning to you. Yes. So market has been euphoric since Monday. We saw a good gap up and we are sustaining at good levels. So technically, I would say as long as 24,400, 24,500 is holding on at support levels, the bias remains positive. And we need to see a clarity of Nifty moving above 25,000 levels to look for higher targets like 25,300 and so on. And even Bank Nifty is supporting the view because the long-term trend is intact. 53,500 acts as the near-term support. And we are looking at the next projected target of 56,000, 57,000. So yes, the view is positive, keeping in mind the support levels.
Okay. Vaishali, what about the Pharma pack? Yesterday, we saw that they reacted well to the US executive order. Anything that you like from the space? Dr. Reddy's, Cipla, Sun Pharma, they all saw a good set of gains and they were one of the top Nifty gainers also.
So I do agree. I mean, actually, Sun Pharma also after making a low and it's holding on, it's giving a bounce. So all these stocks, I do like Cipla at this level. I do like Lupin at this level. Dr. Reddy also post its result, is holding on and doing well. So these are the stocks that one can look in for a positional trade.
Okay. What about IT and metal indices? They saw some profit booking, but for the near term, how do they look on the charts? Anything that you like from the space?
So we saw good run up, the bounce back coming in the IT sector. So maybe they may take a breather, but stocks like KPIT Technology, stocks like Persistent, they still have an uptrend intact. So I'm looking at these stocks where we can see a further run up coming in. And as far as metals are concerned, we are seeing a good movement coming in. But if market continues to be sideways, all these stocks are going to move in rotation.
Okay. Let's talk a little bit about defense and drone stocks also because they have seen a significant run up. Vaishali, do you still believe that there is more steam left in both of these counters because valuations is something that the street is a little concerned about?
I think the trend is quite strong. In fact, as a disclaimer, we have recommended full defense sector to our clients since April. And we have seen good returns. But having said that, I think still upside is possible. Have a look at HAL, BEL. They all have given breakout. I mean, BEL, BHEL. So maybe a little bit of a retracement in between cannot be ruled out. But I think positionally, if you look at it, HAL, all these stocks do have still further run up to come in.
Okay. Vaishali, what about the broader end of the markets? Both of the mid caps, small caps are showing quite a bit of a resilience. Small caps advancing to the second straight session, despite how the headline indices have been performing yesterday. Where do you see? Do you expect further run up for both of these indices?
So I would say, normally what happens is when market is on the way to bounce back, I mean, it's always a front line which starts. So then it is followed by the mid cap and the small cap. So I think, yes, stock specific cannot be ruled out and the trend is quite good. We may see a little bit because we've already seen 1,000-point run up in Nifty itself. So I think we must wait and watch and it should do well in days to come.
Okay. Vaishali, we are almost at the fag end of the earnings season. Anything that you're watching out from a sectoral perspective and something that you're also underweight on at this point of time?
So, no, for buying opportunities, I'm looking at auto sector, especially the two-wheelers. They look promising. Hero Moto and Bajaj Auto, these are the stocks which are technically very well placed. And likewise, even metal sector. And I think FMCG is really not participating. So I think these are the stocks where maybe a little bit of consolidation or something of that sort can happen.
Okay, all right, some consolidation. But let's talk one stock in focus, that is your Tata Motors. Since we were talking about the auto pack as well, the profit has fallen about 51% year on year in the fourth quarter, and revenue is also flat on a year on year basis in the fourth quarter. The board has shared a final dividend of about 6 rupees per share. Nuvama has come out with its rating. They have retained a reduced rating on the counter, and they have given out a target price of 670 rupees. So they have reduced their target price, which was earlier from 720 rupees as well. They believe that the JLR demand is weak in the near term, owing to certain tariff uncertainties in US and continuing market share losses in China as well. And since the company is focusing on cost savings, a muted demand outlook and increasing market or sales promotion spends in the global and domestic markets would lead to a muted 3% EBITDA CAGR over FY25 to 27E. Vaishali, if we look at from a 1 month perspective, the stock has seen a good run up, a 15% uptick from 500 odd levels or so. Now that these Q4 results are out, where do you expect the stock to go?
I think so. As you rightly said, we saw a low of 550 levels coming in the recent past, and from there on, the stock has surged in. So, according to me, as long as 650 level is held on, I think the upward trend should be intact, and maybe we can see a new round of momentum setting in. And above 720, I'm looking at a target of 780 to 800. So, 650 is the final support that I would be looking at. If that level breaks, then I think the stock is in for further weakness.
Okay. Let's talk about another stock in focus, that is your Bharti Airtel, because that also came out with its Q4 numbers yesterday. We saw that the profit was up about 77% year on year, which was excluding the exceptional items, and revenue has surged about 27% year on year. Strong momentum in India, revenue growth in Africa has led to the good growth in the numbers for Bharti Airtel. Vaishali, stock trend is quite positive over the past 6 months, up 17% or so. Any resistance levels that you're eyeing out for Bharti Airtel?
So I would say the stock, of course, long-term trend is intact, and it's holding on to the immediate support levels also. So I would look at a range of 1800 to 1900, 1920. Anything above that, if it sustains, then I think it's ready for a target of 205.
Okay, all right. Let's understand some of the, what is the trading strategy for the near term, at least that people should, involve at this point of time, because we cannot say that we are completely out of the woods from the cross-border tensions at this point of time. Agreed, fourth day of ceasefire, but at this point of time, what do you suggest investors should do, Vaishali?
So I would say, of course, strict discipline. If you are a trader, you need to be thrifty and be quick in your execution of trades, whether it's a stop loss or your targets being met. So I would say that yes, long-term buying opportunities look for at every dip. But if you are a trader, go for stock specific and follow strict discipline.
Okay, all right. We have the MSCI rejig, which is also due today. As we were talking about that, Coromandel International and Nykaa, both of them are to be included in the MSCI India Index, and 12 new additions are also there in the MSCI India Domestic Small Cap Index as well. And all the changes are expected to take place by the end of this month. Coromandel is expected to see about 252 million dollars worth of inflows as per Nuvama estimates, and Nykaa's inclusion is expected to bring inflows of about 199 million dollars. That's also as per Nuvama estimates. Other than that, we can expect the weightage of Cipla, Industars, Ultratech, all of this is expected to increase. On the other hand, HDFC Bank and ICICI Bank's weightage is expected to decrease. So we'll watch out for both of these stocks in the counter today, and especially in the open session, because we're expected to see a little bit of a muted start. But given that we have had a good global handover, so that is a good support that is coming in for the markets. But in just a second, the first rates will be coming on your screen. Let's see how the markets have opened at this point of time. 0.2%, very quiet start for the Nifty 50 at this point of time. 24,600 mark, we are above that levels, but we'll watch out whether or not we can sustain these levels as well. Bank Nifty also a strong start on the Bank Nifty index with about nearly 0.5% gains coming in for the Bank Nifty. Sensex also up about 197 points, which is your 200 points at this point of time. So yes, we have opened up quite in the positive territory given the sell-off that we saw yesterday. So we are back into it. India Wix is seeing a slight bit of a cool off below that 18 odd levels. 2% downtick coming in for India Wix at this point of time. Nifty Pharma Index, one of the top sectoral performers yesterday, seeing a bit of a cool off, some profit booking on the counter. Nifty Pharma Index down about nearly 0.5% or so. On the other hand, Nifty FMCG, like we were talking about as well, that is also flat in the red at this point of time. Other than that, we can see Nifty IT Index seeing good gains of about 0.5%. Nifty Metal Index also seeing a good gains of about 0.5% too. Earlier, we had Goldman Sachs, which had reduced the probability and chances of recessionary fears in the US and have also upped the GDP forecast for the US. So we can see that the IT Index could be ushering in the positive sentiment that is coming in from there. Nifty Auto Index seeing a larger cut with about 0.8% or so. On the other hand, if we look at the broader end of the markets, mid caps and small caps continue to exhibit resilience. Small caps up about third day for the straight session. Small caps with about 0.2% gain coming in, and mid caps also with about 0.2% gains coming in. Now let's take a quick look at the top gainers on the Nifty 50 charts. That includes the likes of Tata Steel with about 2% gains coming in for Tata Steel. Yesterday we saw that the stock had seen a little bit of pressure. Today it's seeing back in action at this point of time, given that the entire metal counter is also doing well in today's trading session. Bharti Airtel with about 1.7% gains coming in, reacting well to its Q4 result numbers as well. Shriram Finance with about 1.5% gains. Tech Mahindra doing well after yesterday's CLS's upgrade to a high outperform call. Today also Tech Mahindra extending its gains with about 0.5% or so. Coal India, HDFC Life also part of the Nifty 50 gainers list. On the other hand, if you look at the top losers on the Nifty 50, Tata Motors, like we were talking about, not reacting well to its Q4 results, seeing a cut of about 2.6%. Cipla with a cut of about 2.1% also, not reacting well to its Q4 results. Hero MotoCorp also with about 1% cut or so. Other than that, we can see Asian Paints, M&M, Nestle, all of them dominating on the Nifty 50 losers list. But let's take one stock in focus, that is your GSK Pharma. Well, the profit has surged about 35% year on year, and the revenue has also risen about 4.8% year on year. If you look at the stock is up about 39% from the past 6 months, and today also if you look at the stock is fairly okay. But right now at the price charts, if you look at for GSK Pharma, 2.4% uptick coming in for GSK Pharma. Vaishali, how does the 7% uptick, very large gains coming in for GSK Pharma. Vaishali, how does the stock look like on the charts? Any target levels that you're eyeing out for?
I think it is still possible that one should hold with a trailing stop loss. This can go towards 3,200, 3,300.
Okay, all right. Let's take another stock in focus, that is your Siemens, because we saw that the net profit has declined about 27.4% year on year in the second quarter, and revenue has risen very moderately by about 2.5% or so in the second quarter as well. If you look at the stock is still resilient, about 1.5% gains coming in from there. Vaishali, the stock recently saw a demerger of the energy business. What does the chart indicate for the near term?
So right now, if you see after making a low at around 2,200 levels, the stock has risen a bit and it's just consolidating. So on near-term basis, I would say 2,800 would act as a support, and this can bounce up to 3,200. So that is the range that I would be looking at right now.
Okay, all right. Let's take some viewer queries that is popping up on our live feed as well. The first query coming in from Sita Ramulu. She's asking the views on TD Power. TD Power, the stock is reacting well today. Yesterday also it saw good gains, settled about with about 9% gains or so. Definitely reacting well to its healthy set of numbers that came in from its Q4 report, where we saw that PAT has grown about 93% year on year, and revenue has also jumped about 32% year on year. Vaishali, how does the charts indicate for the counter?
So it's looking very positive. In fact, yesterday there was exceptionally high volume also. It's ready for a breakout. So near-term resistance comes at 475. And if the volume continues to show an upward tick also, I think this can go towards 490 as the next target.
Okay, Q490 as the next target. Let's take another viewer query. Naveen is asking the views on KFin Technologies. If you look at from the past 1 month experience, the stock is up about 5% or so. And if you look at from the March lows also, the stock is doing well with about 32% gains. Vaishali, how does the chart indicate for the near term? Can we expect further positive momentum going ahead?
So this too, I mean, of course, there is no trend setting in right now. It's just a range bound. So I would say 1,000 would be the support, and this stock can bounce. The near-term resistance comes at 1150. Only if we see the stock surging above this, this can show further trend going towards 1200, 1300 levels.
Okay, 1200, 1300 levels that we need to watch out for the charts. But one stock which is reacting and soaring in the trade today, that is your Garden Reach Shipbuilders. 11% uptick coming in for the stock, where we saw that the net profit has soared about nearly 120% year on year, and revenue has zoomed about 62% year on year. If after the Pahalgam attack also the stock is doing quite well, Vaishali, but we also spoke about defense theme. But what is your take on the individual counter like Garden Reach?
So Garden Reach today with a gap up, I think this shows the inherent strength. And if you see the past data, the high that was made was 2,800. So I would still be hopeful that this will go towards 2,400 and perhaps retest the previous high of 2,800. Thereon we can have a relook.
Okay, all right. 2800 we can also watch out for. That's a big bullish sentiment coming in. Let's take another viewer query. Satya is asking the short to medium term outlook on V-Guard, and he's asking when to book profit at this point of time. V-Guard, after February lows, the stock is exhibiting good trends, up about nearly 22% or so. Vaishali, what is your outlook on the counter?
Well, this too is attempting to surge high. So I would think currently it's range bound. I would look at 360 as support and 410 as a target resistance.
Okay, all right. Let's take another viewer query. Then Komati Muruga is asking the view on ITC as an individual counter. ITC, if you look at from a 6 months perspective, the stock has been doing well from its March lows especially. But Vaishali, you did mention that you were a little underweight on the FMCG pack as a whole, but how do you view individual counter like an ITC?
So ITC, I think it's not a trading stock. I think it's good for holding in your portfolio because it really doesn't have any regular momentum as such. But I would say for now, 420 acts as a support. And if you're looking at a longer term perspective, 480, 500 cannot be ruled.
Okay, 480 and 500 cannot be ruled out for going ahead. All right, let's take another viewer query at this point of time. Pooja Khanna is asking that she's bought Zentech at 1500 levels and she's asking what should be the next target price for 6 months and what is the next accumulation zone for the counter. Today the stock is reacting quite well, 5% upper circuit, that is where Zentech is at. Given that the entire defense pack is also doing well, so this doesn't come as a big surprise at this point of time. But she has bought the levels at 1500 and she's seeing a good level of profit at this point of time. What would you suggest, Vaishali? What should she do?
I think continue holding because this is one of the stocks which has really not participated in full rally that the defense sector has performed. I mean, so this I would say, well, for now, 1700 is a cluster of moving averages where one can see a near-term resistance. But if 1700 level is crossed and sustaining above that, then I think it's ready for a further higher momentum going towards 2000.
Okay, 2000 momentum that we can watch out for. Let's move on to another viewer query. Ashish Prakash is asking the views on RVNL. If you look at RVNL on the counter, past 2-3 sessions, the stock has been doing quite well, 11% uptick in just like past 2-3 sessions as well. But on a railway counter, what is your view, Vaishali, and definitely on RVNL like the viewer has asked about?
So I think RVNL, most of the rail stocks are showing similar pattern. There is a good consolidation and a good base made at 320 levels. Currently, it's at 362. So it's attempting to get into momentum. 380 should be the near-term target. So to my understanding, rail sector now should get into momentum and should do well from here on.
Okay, all right. Let's move on to another viewer query. That is your Anune Riki is asking the views on Amber Enterprises. He's bought the stock at 66.43 and he's asking whether he should average or hold at this point of time. 66.43, so he's seeing a bit of a loss. Vaishali, if the 6 months charts, if it is taken into consideration, the trend is quite negative. And even from the 1 month perspective, the stock is down about 10% or so. What do you suggest he should do? Should he hold or book losses?
So I'm looking at longer term weekly chart also. It's got into a corrective mood, but I think 5,800 should act as a crucial support. If those levels break, then of course exit. And on the contrary, if the stock manages to surge high and 65 is the level to watch. That's the resistance. So these two are the levels that one should watch for. Exit or hold on either ways.
Okay, all right. Let's take another viewer query at this point of time. Anune is also asking the view on Shakti Pumps. He's been holding the counter at 964 levels. He's asking whether he should exit, book losses or hold at this point of time. From February top, the stock also is not doing quite well. And right now it's trading at about 858 odd levels. And he has bought it at 964. Vaishali, what do you suggest? What should you do at this point of time?
I think this stock is likely to do well. It's just a consolidation. 800 should be taken as a support level. And I think this should hold on. Seeing the past data, this acts as a prominent support. So 800 should be the support, and this should again go towards 1000 and plus levels once the momentum sets in.
Okay, all right. Let's move on to another viewer query at this point of time. Kishore is asking the views on RK Forgings. How does the counter look like? The stock recently hit a 52-week low also, Vaishali, and the trend from the Pharma perspective is very sharply and formidably in the negative territory.
That's Ramakrishna Forging, right?
Yes.
One moment here. So Ramakrishna Forging 577, it's quite an oversold. So wait for it to bounce. It can come towards 700, 750 for now.
Okay, all right. 700, 750 the stock can come to. Let's take another viewer query at this point of time. Siddharth is asking what should be the buying levels for Hero MotoCorp and what are the targets for the counter as well. Today the stock is not reacting well to its Q4 results. Very modest set of results for the March quarter performance, where we saw that the net profit has risen about 6.4%, which was below what the street was estimating, and revenue however has exceeded the street expectations on the other hand. That was the jump in revenue according to experts was driven by higher ASPs, which is your average selling prices, due to the price hikes which was taken during the year, and the premiumization trend and an increase in export volumes as well. But Hero MotoCorp, how does the counter look like? Today is one of the top Nifty 50 losers as well, Vaishali.
So I would say actually the stock has fallen right from 6,200 levels to now making a bottom at 3,400. But I think this will do well because even on a daily chart, if I'm looking at, it's come above the moving averages. So 3,800 should act as a near-term support. And as a positional trade, also look for a target of 4,600. And then about that, as I mentioned, it can go higher. So in my view, it's a positive outlook. 3,800 should be the support. Accumulate with that.
Okay. All right. Let's take another viewer query at this point of time. Jagan is asking if there is any, what is the perspective on Karnataka Bank going ahead? If you look at the 1 month charts, it's quite positive. 12% uptick coming in for the counter. What do you expect for the near term? What does it hold?
So it is getting in a trend. It's making higher bottom, higher top formation, and it needs to go about 205, 210, which will act as a crucial resistance. For now, 210 acts as a resistance. Above that, look for a target of 230.
Okay, look for a target for 230 at this point of time. All right, let's move on to another viewer query. Debashish Chakravarti is asking the views on PG Electroplast for the next 3 months, and he's asking that despite the strong Q4 performance, the stock has been lagging. He's right, as PG Electroplast, it's down by about 11% or so in the past 1 month itself. Vaishali, what do you expect? What is the next 3 months hold for the counter?
I'll just have a look. So PGEL, that is, I think 845 is the current price. Well, nothing much happening. This too is in a consolidation. So 750 should act as a support level. And the clarity of an uptrend would come only above 900 levels. So that's the way one should look at. If 750 levels break, then it's heading in for a further corrective move. Or else above 900, it can go towards 1000 and 1050.
Okay. All right. Let's move on to another viewer query, since we also talked about Karnataka Bank earlier. Let's take a viewer query on Canara Bank. Sine is asking on views on Canara Bank. The stock has been reacting well from the past 1 month itself, and it's up about 12 to 13%. And the CEO is also expecting that the corporate loan growth is expected to pick up in the second half of FY26. That was the earlier update which came in. Also, Canara and Union Bank have also announced a special deposit scheme to boost the resource mobilization. Despite this comes at a time when they have seen slowing deposit growth as well. Canara Bank, how does the counter look like, Vaishali?
It gave a good breakout yesterday. We saw a good bullish run up. So for now, I think uh, around 110 is the next target that I would be looking at. And above that, we could expect higher targets going towards 125. So for now, near-term target open is 110.
Okay, 110 for the counter for Canara Bank that we need to watch out for. Let's move on to another viewer query. Ritik Bhardwaj is asking the views on five-star business. How does the counter look like? Because past 1 month, the trend is quite negative, 8% downtick coming in for the counter. It's been on a downward spiral as well. And very lower top, lower bottom formations coming in from the 6 months perspective. Vaishali, what do you expect?
Well, I don't think I have the stock.
Okay,
Let me just have a look. Yeah, I think, yeah. So the one which is 683 currently, I'll just have a look at the chart. I think continue holding. This can go towards 730, 750 in near term.
Okay, 700.
That is the resistance, and 660 is the near term base. So below 660 it gets weak, and if it surges, it goes towards 730. 730 is the resistance to look.
Okay, all right. Just one last question before we let you go, Vaishali. What are your top picks at this hour? We are seeing a little bit of a buying interest coming in into the markets, but anything that you want to point out for the viewers?
So right now, we do like granules 484. It has shown signs of bottoming out, good, decent corrective move, making double bottom formation and then surging. So I would say 460 as support, and this can go towards 540 levels. The other stock to my liking, as I mentioned, I like Jindal Stainless. 638 is the price, so 620 would act as a near-term support, and look for a target of 680.
All right, those two counters that we need to watch out for. But with that, we have to let you go, Vaishali. Thank you so much for your time, and we hope that we connect with you soon.
Thank you so much.
All right. All right, let's take a quick check of the markets before we move on to the next guest of the show. Well, the buying has seen an extension, and we can see that the sensex is up about 300 points at this point of time, and Nifty is also up by about 100 points. Above that 24,650 mark, that is where the Nifty stands at this point of time. Advances are taking an upper hand, so the breadth of the market is well in the positive territory. Mid caps and small caps, both of them supporting the markets and the rally as well. Mid caps with about 0.8% gains, small caps with about nearly a percent gains or so. On the other hand, if you look at from the sectoral perspective, what is not doing well, that is your Nifty Pharma index seeing a little bit of a profit booking, a little bit of cool off compared to what we saw yesterday. And Nifty private banks are seeing a bit of a back foot at this point of time. Other than that, we can see majority of the sectors are trading in the positive territory. But let's move on to the next guest of the show. Joining me, we have Divam Sharma, co-founder and fund manager at Green Portfolio PMS. Divam, good morning. We are out of the tariff uncertainty, and the cross-border tensions also seem to be calm at present. So what is the next leg of rally or any key event that the markets would watch out for?
Good morning. Yes, we are sensing a very bullish outlook going forward. We are looking at inflation easing recently. We have seen RBI easing over the last few months, and we further sense easing of interest rates, and markets really like easing of interest rates. So we are very bullish over there. If you look at the trend of inflows into mutual funds and the trend of inflows overall, we have been sensing some very good trends over there. Although there was some blip over the last few months, but over there also we are sensing some very good trends. So that is again positive. If you look at the macros of the economy as well, the GST numbers, the power consumption, the rural consumption, the overall macros are also looking very bullish. So it is time when the markets have corrected decently. The inflows are there, the liquidity is there in the market. FIIs have to buy here on, considering that the interest rates are falling, and and going forward also the outlook is on a reversal. So overall, the numbers are also decent. If you look at the numbers of this quarter that are coming in, the numbers are also decent. So we are bullish overall on the Indian markets.
The earnings growth, if you divide from large cap space and versus the small and mid caps at this point of time?
So we are looking. So we are mostly broader market investors, and we look at small and mid caps. If you selectively look at the sectors, there have been certain areas where the results have not been that great, but the outlook really looks positive. We have seen a lot of capexes happening in a lot of companies that we cover. The outlook looks positive, although Q1 and Q2 could have some dent in terms of the US tariffs that have been implemented overall. But if you look at a long-term kind of a view here on, the bullishness is there in terms of the outlook.
Okay. So would you say that the froth and exuberance that was visible in small and mid cap space can be, the earnings is playing a catch up at this point of time?
Definitely, if you look at September of last year, the froth was there in the markets. If you look at now, a lot of buying opportunities are there. In fact, we look at in terms of our allocation, we look at what types of what are the stocks that we are getting at current valuations, and then we buy. And in September of last year, we were sitting on almost 60% cash. If you look at today, we are almost deployed in terms of our allocations, in terms of our cash allocations, and we are sensing some very good opportunities at some decent valuations. We are not going to get to very cheap levels. India continues to be one of the fastest growing GDP in the world, and India will continue to command a premium. And the numbers, the numbers that we are seeing in terms of macros, the numbers we are sensing in terms of the opportunities. Even if you look at the UK FTA, that was a very big positive, and we are also sensing a US FTA very soon. So the kind of opportunities we are sitting at, the valuations are not going to be cheaper than this, and we sense that this is a very good opportunity to start allocating money, as most of the negatives are factored in the markets, and we are sensing a positive growth momentum here on.
Okay. Divam, which sectors have you started to deploy more cash right now? And what are the sectors that you're underweight at this point of time, since you mentioned that you're quite bullish on the markets at this point of time?
See, we have been looking at defense. Of late, we've been putting a lot of money in defense. We've been allocating money to pharma. Some of chemicals, like recently, we've seen some of chemicals doing well. We believe that this is start of a good trend for the chemical sector as well. Electronics manufacturing also, we are sensing very good opportunities over there. So we are allocating money over there. In terms of some of automobiles and auto components also, we are getting some good valuations over there and are allocating money over there.
Okay. Divam, how do you view the IT and metal space now that the trade deal between US and China is also concluded, and Goldman Sachs have also lowered their chances of recession and in US as well? So how do you view the entire IT and the metal pack both as well?
So see, IT overall, we have been slightly bearish over the last many quarters now. We believe that there are still a lot of uncertainties around large orders flowing in. There are a lot of uncertainties around AI and other areas. So we believe that IT is still like a void as of now. Even though a lot of valuations have corrected in the large cap IT stocks, and the valuations are looking attractive, but still, if you look at the overall outlook, we still believe that there could be some more quarters before IT starts reversing from here. in terms of metals, we believe that it is a lot of detrimental to the global factors and the global economy. And although there are chances, the chances of US recession have uh, reduced, and overall the global economy is looking good, but still. Metals, we are slightly like metals have done well overall over the last few years, but still at this point in time at these valuations we are still avoiding metals.
Okay, okay, you're avoiding metals at this point of time. Divam, you mentioned that you're deploying more money into defense sectors as well. How do you see them fundamentally at this point of time? Do you believe that the near-term majority of the triggers have been priced in, and how do you see the long-term horizon, especially when it comes to the order visibility and the execution of the same orders?
If you look at defense overall, India is currently like spending around 6.8 lakh crores every year, and this budget is increasing. We've already seen a significant increase of the defense budget overall over the years. The domestic manufacturing as a factor of the overall defense has significantly increased over the last few years, and I think this is still the beginning of the trend. We are seeing a lot of companies coming in. Earlier, a lot of even listed players used to use Chinese products and tag them and sell them to Indian defense. But now a lot of domestic manufacturing have cropped up. A lot of large corporates, if you look at say Adani or L&T or Tata's, they have jumped into the party and have contributed big time in terms of the overall ecosystem. So this ecosystem has evolved. The way that the recent war happened, the way India has gained popularity in terms of its defense and its equipments, and are generating export-oriented queries. I think this sector is ripe, and this sector should do significantly well from here, and that's what the current rally is also showcasing. And we believe that overall there are a lot of opportunities in listed as well as unlisted space in this sector, and a lot of small companies are going to get listed from here, as well as a lot of large players who are there in the sector are seeing very good opportunities. For that matter, we really like Adani Enterprises as it has a good exposure to defense. There are a few other names as well that we are like allocating to the portfolio.
Okay, okay. Since you were talking about the geopolitical tensions, I will also, talk about travel and tourism stocks because they saw quite a hit due to the cross-border tensions. Would you suggest investors that this is the right time to buy the particular dip?
See, in terms of the travel and tourism, we are definitely in a momentum, and this is the millennial population. The population that we have is all middle, a majority-driven middle class, and the highest contribution to middle class population, which is very aspirational. And we have seen Indians traveling. We have seen Indians really occupying plane seats, hotels. And I think that this trend is going to continue. There was a blip. There was some nervousness amongst a few because of the advisories, because of the tensions that happened. But this should go away very soon, and this sector should continue the momentum. And we are seeing good investments in this sector as well coming in. So we are bullish on this sector henceforth as well.
Okay, okay. Also, now, let's turn a little bit to the March quarter performance. I want to understand about the new age companies, especially with the food delivery businesses like Swiggy or even Eternal. I mean, if you look at from December highs, both the stocks have seen significant downtrend. And if you look at the March quarter performance, their aggressive store expansion has led to, a lot of cash burning at this point of time. So how do you suggest investors to go ahead with, these counters, food delivery businesses going ahead?
See, since the very beginning, we've been not that bullish on these sectors. Although they have generated a lot of popularity, they have actually gotten into every household. But we still do not like believe in how would they make actual profits. They have increased the platform fees over the last few quarters and have tried to become profitable. But the kind of burn that is there in these companies even right now. It's very difficult to change the DNA when you are in a VC or a growth stage where you are only targeting growth, and then when you are completely shifting gears and getting listed and targeting profitability. So the DNA is completely different, and Indian markets respect profits and profitability more than the growth, and that's what is visible also. Although the stocks have fared well for some investors who would have invested in the IPO, especially Eternal. But we believe that in the listed space, we are seeing a lot of stocks which are pretty like inexpensive in terms of valuations, and they are fairly simple businesses and very growth oriented. So rather than allocating money into these type of stocks, investors could look at the other sectors which are significantly growing here on and are available at good valuations.
Okay, okay. Anything that you want to point out that you mentioned that has good valuations, and people should shift their focus towards that?
You are asking about the sectors or stocks?
Sectors.
So as I said, we are liking auto components. We are liking chemicals to a certain extent. We are liking pharma to a certain extent, and in the broader markets, there are a lot of niche manufacturing players. So overall, as a theme, we are liking manufacturing, and that is the space to be in. If you look at India, that is where the government's focus has been. That is where India's consumption is there. That is where we are sensing export opportunities and taking businesses from China and taking businesses from other countries. And that is the know-how that we have, right? So most of these 22 PLI sectors that are there, where there has been a thrust and there has been a private capex that has happened. I think those are the sectors. Even if you look at the UK FTA, the textile sector benefited from this agreement, and similarly, like we are going to see more of such agreements going forward, and the domestic manufacturing sector is definitely going to benefit from this overall trend.
Okay. All right. With that, we have to let you go, Divam. But thank you so much for your time, and we hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets. We are solidly in the green at this point of time, and the markets have extended its gains at this point of time. Sensex up about nearly 500 points. Nifty also above that 24,700 mark. So yes, we are sprinting ahead compared to what we opened earlier in the day. All the sectors have been flipped into the positive territory. Even the weakness that we earlier saw in Nifty Pharma index is now flat in the green at this point of time. And Nifty Metal Index also, it is one of the top sectoral performers at this hour, 2.8%, which is nearly 3% gains coming in for the Nifty Metal Index. Broader end of the market, small caps, mid caps, both of them participating well. Definitely small caps with a good set of gains, more than 1% or so coming in for the small cap index. So yes, we are good. We have a good market breadth today. Advances have taken an upper hand, and declines very moderate. 653 shares have declined at this point of time. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be taking through what the stocks have developed and what the markets are in focus. Stay tuned to moneycontrol.com.